All right, traders, welcome to iStreamTrading.com. This is your beginner trading course, Introduction to Trading, and this is part one. So let's talk about what is trading. Okay, trading is buying or selling an asset for a profit. If you are long biased, you make money when the stock goes up or the asset goes up. So you want to buy low and you want to sell back higher. And if you're short biased, you're a short trader, you make money when price goes down. So you want to sell high and buy it back low. And we'll get more into this in our future videos. Let's talk about why you want to become a trader. Well, you've got your financial freedom. You can work from anywhere, work from home, work from the beach, hotels, anywhere with an internet connection. You set your own schedule, and that gives you a lot of time freedom and flexibility in your life. So let's talk about why you don't want to be a trader. Well, first is you can definitely lose all your money. And sad truth is most new traders do not follow the rules. They don't paper trade. They don't learn the ins and outs. They just kind of jump in. They follow some alerts. They follow some other people around. And most of the time they end up getting killed in the industry and lose all their money. Also, there's a very steep learning curve. Now, if you are wanting to be a trader, you're going to have to put in a lot of time to learn the ins and outs of this business. And it's a lot of hard work. Okay, a lot of people think it's very, very easy to be a trader, and it's not. You have to be able to put in the hard work and do what others won't do to give you that edge in trading. So let's talk about how much I need to start trading. Well, new traders should paper trade until they're profitable on their paper account for at least 2 to 3 months. Intermediate traders should start with $1,000 to $5,000, and experienced traders should have $5,000 to $25,000 to start with. So what stockbroker should you use? Well, there's a lot of good stockbrokers out there. You have Ameritrade, E-Trade, Schwab, Interactive, Cobra, Speed Trader, Ninja Trader, First Trade, Webull, Robinhood. These are all good brokers. Some of them are commission-free brokers, and Interactive, Cobra, Speed, those are more professional platforms. You're going to get a much better platform and great executions and fills, but there are fees associated with trading on those platforms. So let's talk about what is the PDT rule. Well, PDT rule is the pattern day trader rule. So if you make 4 or more day trades in a 5-day period for any account under $25,000, you are labeled as a pattern day trader and they will restrict your account. Now, a day trade is opening and closing a trade on the same day. This does apply to options as well. Now, this only applies to stocks and options, and this is only for U.S. citizens, okay? It doesn't apply to Forex, futures, commodities, cryptos, things like that. And 401k accounts are also not under the PDT rule. Now, yes, there are ways around the PDT rule using a cash account, and we're going to talk about that in our next video. Now, let's talk about what causes a stock price to move. Okay, we have catalysts, right? They're often the most obvious reasons why a stock price will move. Some examples would be news releases, earnings reports, FDA approvals. These are usually drug companies. Investigation or probes into companies. Investigation can cause a stock to dump, but winning an investigation or a lawsuit can actually cause the stock price to go up very fast. Analyst upgrades or downgrades, product launches, unemployment or employment numbers, Federal Reserve meetings, etc. These can all cause a stock price to move and have extreme volatility. So what is day trading versus swing trading? All right, well, day traders, they close positions before the end of every day. They make several trades every single day. They usually pay higher fees due to more trades, and they're usually just making smaller gains and looking for those momentum plays or scalps. A swing trader usually holds from 1 to 30 days. They make much less trades or fewer trades. They're not under the PDT rule. They have very low trade fees because they're not making a lot of trades, and they have potential for larger gains because they're looking for a much bigger move. Now let's talk about the players in the game. All right, you have your long retail traders. They make money when the stock price goes up. You have your short retail. They make money when price goes down. You have your institutions, which are like banks and hedge funds. They're usually buying large blocks and holding. And you've got your insiders. Those are usually employees or owners of the company, and they're either selling before something big happens or they're buying before something big happens. So it's important to take a look at the insiders buying and selling. It's just useful to take a peek at that. All right, guys, in the next video, we're going to be talking about how to make a trade plan, how to read charts properly, different bull and bear patterns, support and resistance patterns, risk management, your order types, proper sizing based on the stock that you're trading, and the best trading indicators that will help you along in your trading. All right, guys, I hope this helps you. If you want to see part 2, just subscribe to the channel, and we're going to be releasing this in the next few days. Also, you can visit our Discord. It's in the link in the description, and we'll talk to you guys soon.